India and Bangladesh are two of the most populous countries in the world. They are neighbors with a shared history and culture. Both nations gained independence in the 20th century. Since then, both have been on a journey of economic development. India, with its vast size and resources, has long been seen as an economic powerhouse. Bangladesh, on the other hand, has emerged as a surprising economic tiger in recent years. This essay will compare the economic trajectories of these two South Asian giants. We will delve into key economic indicators. We will also look at social factors and political stability. Finally, we will consider what the future holds for these two important economies. One of the most striking economic trends of recent years is Bangladesh's GDP per capita surpassing India's. For 4 consecutive years, from 2020 to 2023, Bangladesh has held this lead. In 2023, Bangladesh's per capita GDP stood at $2,621, slightly higher than India's $2,612. This remarkable feat is a testament to Bangladesh's economic progress. However, it is worth noting that India is projected to regain its lead by 2028, according to the IMF. Regardless of who is ahead, the fact that these two countries are in a close race speaks volumes about the shifting economic landscape of South Asia. Looking at overall GDP growth, India remains a much larger economy than Bangladesh. In 2024, India's GDP was $3.94 trillion, dwarfing Bangladesh's $455 billion. However, the story of growth is more nuanced than just size. From 1980 to 2024, India's GDP grew 21 times over, while Bangladesh's grew 18 times, a smaller difference than one might expect. Zooming in on more recent periods, from 2014 to 2024, Bangladesh's economy actually grew at a faster pace, 120%, than India's 93%. This highlights Bangladesh's recent economic momentum. However, Bangladesh has experienced a slowdown in growth in recent years. There are concerns that this slowdown could continue. Inflation is a key concern for both India and Bangladesh. In 2024, India managed to keep its inflation rate relatively low at 3.5%. Bangladesh, on the other hand, grappled with a much higher inflation rate of 9.7%. High inflation erodes purchasing power and can stifle economic growth. Bangladesh will need to get its inflation under control to ensure sustainable economic progress. Section 5. Debt dilemmas. Government debt is another important factor to consider when assessing economic health. In 2024, India's government debt stood at 82.5% of its GDP. Bangladesh's debt was significantly lower at 41.4% of GDP. While India's debt is higher, it is important to note that India has a more developed financial system and a stronger ability to service its debt. Nevertheless, both countries will need to manage their debt levels carefully to avoid any risk of a fiscal crisis. Section 6. Exports. India takes the lead. When it comes to exports, India is a global powerhouse. In 2023, India was the 10th largest exporter in the world, with exports totaling $777 billion. Bangladesh's export volume was significantly smaller at $57.5 billion. India's diverse manufacturing base and growing services sector have made it a major player in global trade. Bangladesh, while it has a thriving garment industry, still relies heavily on a few key export sectors. Section 7. Trading partners. Despite the disparity in export volumes, India and Bangladesh have witnessed a significant increase in bilateral trade over the past decade. Total trade between the two countries has soared by 165%. India's imports from Bangladesh have surged by an astounding 426%, driven largely by growth in Bangladesh's garment industry. India's exports to Bangladesh have also increased, though at a more modest rate of 145%. This growing trade relationship is mutually beneficial and strengthens economic ties between the two neighbors. Section 8. Social progress. Beyond purely economic indicators, it is also crucial to consider social development. In recent years, Bangladesh has made remarkable strides in improving the well-being of its citizens. In 2024, Bangladesh's life expectancy reached 73.82 years, surpassing India's 70.62 years. Bangladesh has also made significant progress in reducing infant mortality, with a rate of 20.76 deaths per 1,000 live births, compared to India's 25.18. These social indicators are a testament to Bangladesh's investments in healthcare, education and social safety nets. Section 9. The political economy. Political stability and sound governance are essential for sustained economic growth. Bangladesh has experienced periods of political turmoil in the past which have raised concerns about its ability to maintain its economic momentum. India, while it has a more robust democracy, also faces challenges in terms of bureaucratic efficiency and corruption. Both countries will need to focus on strengthening institutions, promoting good governance, and maintaining a stable political environment to attract investment and foster long-term economic prosperity. The economic trajectories of India and Bangladesh are intertwined. While India remains the larger economy, Bangladesh's recent economic performance has been nothing short of remarkable. The coming years will be crucial for both nations as they navigate global economic headwinds and strive to secure a more prosperous future for their citizens. The outcome of this economic contest will have profound implications for South Asia and the world.